I'm gonna hop right in here. So, a question I'm getting asked quite a bit is if there's any investing opportunities still in this market. I think if you're an investor or looking to become an investor, you're pretty aware that um, investments that the market kind of slowed down here over Christmas, Thanksgiving, mainly due to interest rates. They kind of just put a halt, and I think investors really realized just the impact that interest rates has on their investments. So, um, the question I got asked this week was just, are there any opportunities out there? So I figured I'd just hop on and do this. So I'm going to share my screen. This document will be available at the end of this. I'll email you if you want this, put a comment in the chat and I will be sure to email it over to you. But, the question is, are there any investment opportunities today? So again, this is the first week in February, the first full week of February. I think there's really a couple options out there for investment opportunities based on what you're looking for. I think this basically first comes down to what's your investment type. Are you looking for a risk or low risk? And I guess just as a caveat, I just need to say this. In the state of Maine, we are required to perform brokerage services to our clients. This talk right here, we do not have a client relationship. So I'm going to keep this pretty general and not on a specific, your specific situation. I'd be happy to talk to you at some point about that or go talk to your favorite broker. But, this is going to be high level, general stuff, not your specific situation. So just take that with a grain of salt. So like I was saying, it really depends on if you're looking for what your risk tolerance is. Are you looking for something where you can force appreciation, a value add opportunity where either you can go renovate, you can raise the rents, you can lower expenses, or are you looking for a place where there's going to be long-term appreciation in the property? So this historically has been like Portland. There's only so much space left in Portland. And as we've seen in the last couple of years, it's been super desirable to move there. So Portland has had steady appreciation. It might not have the value add opportunities, and we can get more into that later. But anyway, so I think first you just got to figure out what that risk level is for your situation. The next thing is, next thing you got to think about is kind of what you're looking for returns. So again, your situation, you're gonna have to figure out what you're looking for a return on your investment. Does it make sense for you to buy real estate, or should you go invest in the stock market or go buy a CD or just sit on your cash? You got to figure out what you're looking for in a return. And so again, on the interest rates, what we saw was that it doesn't make sense for you to buy a property that returns less than what you're paying on your mortgage or on your debt service. So, this video is, this talk is not to go over all the different metrics in, real estate investing, but if your property gives you a 5% return on your investment, but you have to go take out a loan at 6% interest, the 5% that you're getting is less than the 6% you're having to pay on your mortgage, on your debt service. So it doesn't make sense. That the math, you're going to be losing money month to month or over the course of a year because of that. So again, you need to determine what your returns are and what you're comfortable with. I think you also need to, that would be more like appreciation play. If you're like, I'm just going to buy this, park my money somewhere, does it work? Well, you're going to figure out if the returns versus, the interest rate work for you. You're also going to need to interest rate versus returns. You're also need to, if you're going to do a value add, is determine what what is a comfortable amount that you're looking to get in the deal? Like how much, what are you comfortable and okay with accepting for a return? Like, I guess the best way is like what you're going to look for is a return on that, effort you're going to put in. Specifically, like if you improve, like, are you okay with improving the value 20%? Is that enough? Or do you need to improve the value 30%, 40%? You got to determine what that, how much the value add improves the property. And I guess this is like, again, just a high level example. And this is the example I used on the call, when someone asked me this question was, if you were to buy a property at, again, I'm just writing this down so it's here. So if you buy at $1 million and you get a 6% cap rate or return, however you want to think about this, but again, we're just talking high level, not the specific metrics. That means you're going to get $60,000 a year. Now, if you can raise rents, if you can increase the rents or lower the expenses, and your new return or new income that you get that for that property is, say, $80,000. So now the effort that you put in is now, you've got an extra $20,000. So now if we look at that, look at what you paid for, you've now purchased a property. You purchased it at $1 million with a return of $80K. Now that is again, just high level, an 8 cap. So that is a 2%. You have a 2% spread on what you bought on what it is now. Now you got to determine, is that enough for you? Does that make sense for you? Again, now we just like to put it in perspective on what that extra $20,000 does for your investment. If you were to now sell, so now that if that $80,000, again, we're just doing some simple math here. This is back of napkin math. And you were to sell it at a 6 cap, sell at a 6 cap, which is what you just paid on the market. So it might be higher or lower depending on what the market is by the time you get those improvements done. That now, so that's $80K divided by 6% equals $1.33 million. Again, I only know this because I just did it this week when I was talking to the person. So now so that $20,000 change in net income added $330,000 of value. So is that a good enough return for you? Your personal situation is going to determine on if that makes sense. I'm seeing opportunities like this in the market. It may be in Portland, it may be in Westbrook, it might be in Lewis and Auburn, it might be Biddeford Saco, but I'm seeing, with my clients that are buying right now and just seeing things turn over on the market, that this is a realistic, I strongly feel like this is a realistic value add that can happen, that you can improve the rents by 2%. You can improve your cap rate by 2%, which equals a $300,000 improvement in the value. So does that work for your investment style? Is that worth the effort? Do you want to do a value add, or you just want to park your money? So I think, once you figure out what, if you're looking for the value add or the appreciation, and then on the value add, what you're kind of like looking for and is an acceptable increase in value, that's where you're going to start seeing the deals and seeing if things meet kind of that buy box. And I think the next thing, and is just, and again, this goes back to the appreciation or the risk, is you need to figure out location of where you want to purchase. because the location is going to determine the opportunities that you have available. More specifically, and again, if you're just starting out into investing, you might not be aware of this. Maybe you are. But Portland, the last 2 or 3 years, passed rent control. Now, again, I'm not giving advice on if you should invest or not invest. This is just, what it is. Rent control is not a bad thing if a landlord, if a current property owner was staying on top of market rents. If they were being more of an active landlord, treating it like a business, and how do I always improve my bottom line? Not saying they were, mean, terrible landlords. They were just on top of keeping their units at market rent. So whenever it turned over, they were raising rents. Again, I'm sorry. I'm just trying to take notes while talking. Pro or con for you? So I think so again, rent control I don't think is bad, but it's really shining a light on the people that didn't properly manage their properties at the time. And what we're seeing is, and the limitation of rent control is that you can't raise rents drastically. Now, yes, there's people trying to get another vote up where you can change how you can increase rents on the turnover, but let's not talk about that, but just focusing on what the situation is right now. So you're limited on how much you can increase rents year over year. So I guess on a high level, I think that there's still opportunities in Portland. The opportunities in Portland, if you're looking for the appreciation play, is I think you should pay more for at market properties. So I think, this is where I was looking for, premium. I haven't seen this yet, or it hasn't been very noticeable to me for properties that are coming to the market. It's probably because most of the things that are coming to the market are under market value on rents. But I think if I was, my risk tolerance was low and I was looking for appreciation play, I would be looking to pay a premium on a property that already had the rents at market. So this is going to be a property that most likely had been professionally managed, or the seller just was on top of, keeping rents at market value. And so that way you're not left with this huge delta between where markets are and where they could have been. Again, your situation might dictate a different, approach to investing. So don't take this, putting all these caveats here. On the flip side, the other, this I think is probably one of the better options. And I think even for an appreciation play in Portland, is to convert to Section 8. Now, I think there's a conversation you should have with your broker or property manager or, your friends and, mentors. But I think on a high level, Section 8, I think gets a bad rep. But it provides a great opportunity for you as an investor. And specifically just looking, if we're just in this rent control hat, if the property is significantly under market value, so there's a significant delta, well, Section 8 rent, so Maine Housing Authority allows you to charge or, get reimbursed or however the terminology you want to use. It's almost 85-90% of market value. It's pretty close. So if get a property where it is, 50% of market value, it might make sense to just convert it to Section 8, because then that helps your cash flow immediately, and you're buying in Portland, so it's, more of an appreciation play. Obviously there are some downsides there, and again, there's more details on the rent control than a 20-minute talk could do. You potentially, handicapping that property to forever be a Section 8 property. Again, there's pros and cons. Definitely talk about them with your advisor. But that's an opportunity there in Portland. The other option, and this is some people that I work with, it's not important or not affected if owner occupied. So the rent control rules, if it's an owner occupied property, you're not subject to rent control, and you can raise the rents. So if you're looking, you're a first time home buyer, you're thinking, I want to do this, house hacking or whatever terminology you want to use, potentially you go into Portland and you buy a 3-unit or 4-unit property and you live in one of the units. Now, you're not that property is owner occupied, so it's not subject to the same rent control rules. So you can raise the rents to market value. Now, I think that's kind of the pricing strategy I'm seeing by listing agents in the Portland market on those smaller multifamily properties is I'm going to price it so it only makes sense for a owner occupied to come in and raise rents to market and not have to deal with the rent control. So I think that's enough for beating on rent control. The other opportunity is around Portland. Well, actually, I want to back up. There is one other opportunity in Portland, and that is the Path of Progress. And the reason why it also relates to Westbrook. So if you've been following the news, there's 2 things that are happening in Portland. There is West Bayside, and there is I'm not going to spell this right, the Rue Institute. So West Bayside, there is a investment company that just came out, and their 5-year plan is to put in like 800 rental units, and they're going to bring in like commercial, it's going to be like a micro community. So potentially a good appreciation play in Portland is to buy in that area. I think what we're going to see, obviously time will tell, is, it's going to be, I would assume it's going to be a desirable place to live. This company, this investment firm is like going to basically bring this community, this micro community in the area where like it's going to be desirable to come visit. There's going to be shops, there's going to be restaurants and bars. And so you're going to have this like collection of people that are going to want to have access to it. And so the surrounding kind of buildings may be a good desirable play there that people would be willing to, there'd be a high demand to live there. The other one is the Rue Institute, the Northeastern's entrepreneur school over there by B&M Beans. Again, there's, that one, they're in the process of renovating they're going to put the big campus out there. And I think just the general idea over there is if you can get something over there, you're going to have high demand because you're going to have graduate students looking for housing. Now, yes, you could live in all of Portland, greater Portland, and still commute to the college. But obviously, I guess from a student perspective, like when I was in college, if the closer we could get to the school, the better. If we could walk there, that was great. Personally, I did not. Me and my roommates, we had to drive there. So there's an advantage, and there's going to be demand on having an apartment near that campus. So back on location, and that a good transition is around Portland. And I think the obvious one is Westbrook. And again, on the Path of Progress is Rock Row. So Rock Row, again, you're probably aware if you're looking in this area, Rock Row has kind of I want to say transformed Westbrook, but had a major impact on the economic growth of Westbrook over the last couple of years. They came in, they put, Market Basket, Chick-fil-A, they put in the mini strip mall right there on Brighton Ave, and they're continuing to grow and grow to the point where just, I think last week, Westbrook approved a 200-unit rental complex, rental unit complex to go in. So there's demand, and developers are noticing it. There's future demand for housing over in Westbrook. So as you as an investor, I think a great play is to go into the Westbrook area. It's going to, I think there's a high likely chance that it continues to improve. And I think that is worth looking into as both an appreciation and a value add opportunity there to prepare for that influx of demand to be in the Westbrook area. And what I'm seeing my clients do, and you may have heard, or Lewiston, Auburn, is basically people are getting priced out of Portland. And that's not a new phenomenon, both as like a single family or an investor. Like, just prices have gone up drastically over the last couple of years, and Portland being one of those areas for investors, again, rent control, but also just pricing. So people are getting priced out. So they're looking at surrounding areas. And Biddeford, Saco, Lewiston, Auburn have kind of, I'm going to say taken off, but they are a huge focus for investors. And I think, and if you're not familiar with those towns, they're both old mill towns. They kind of thrived on that textile mill businesses 50 years ago. And I want to say it was a more renter focused market. Both of them, were renter heavy. And it has stayed so for the last 5 decades. And what we have seen, what we as an industry and myself, I'm seeing investors looking at those markets. Historically, when I got out of college, not to date myself, but 2016, Lewiston, Auburn was a cash flow opportunity for investors. And basically you could buy things in Lewiston, Auburn, and the numbers worked out so that way you could get significantly more in rent than what it actually cost you to buy the property. So, but the values of those properties didn't really change much year over year. Like, there wasn't much appreciation in that market. And what we saw from COVID and and again, I think, the political atmosphere in Portland has driven investors out to the Lewiston Auburn market, and those values are through the roof. I just this week, this is again February 10th, there's a 45 unit apartment complex that came on in Lewiston, Auburn that was listed for $115,000 a unit. Historically, Lewiston, Auburn was a $50,000 per unit market. And then to reinforce that, there's actually I saw 2-3 units recently get put on in Lewiston, and they were, I believe, $100,000 a unit. So you're seeing that appreciation just, here 2023 versus what it historically was. And then additionally, in the Biddeford Saco area, there's been a huge demand, and I think more so than Lewiston Auburn because it's closer to Portland. You could have a property manager easily manage something from Portland down to Biddeford Saco because it's only 30 minutes, 20 minutes, depending on traffic, versus Lewiston Auburn's 45. So you're seeing this influx of investors moving south to the Biddeford Saco area. So, and I think just that would be the second tier markets, and then third tier markets would be Brunswick. And again, that's a college town with Bowdoin up there. So Brunswick, Bath, again, those have always been Bath Moore has always been a renter focused area. And I think investors are starting to take it more seriously as an opportunity to go invest there. Or you have people, I can't spell, down in Stanford. Again, more of a, area that lost a lot of businesses from the 80s and 90s. Has been more of a renter heavy market. And so again, you get these investors where they're getting slowly priced out, and they're maybe not even priced out, but they're seeing more opportunities in these markets. So that's what I think. I guess that's pretty much all I can think of for kind of like high level opportunities here in the market. So again, you need to talk with your favorite broker. I'd be happy to do that, but this is not direct advice for you. But there's opportunities here in the market. I think it is competitive. Investors, I was talking with someone, specifically, and this was specifically multifamily focused. This is not other commercial opportunities, but I was joking with someone. There's a lot of investors that have access to like $2 million, or they can get financing for $2 million, right? So you're looking at, they have like $500,000 cash. That's 25% down. So that's a very, it's super competitive in this sub 2 million price point. And I think a lot of people, that's kind of where they start. So, and I want to bring that up, is just, the market is competitive for investors. These opportunities I just talked about, other people are looking for those exact situations, right? People are okay with improving the net, a 2% increase on cap rate adds $300,000 in value. Like, that is a great investment for them, because then they can basically refinance and pull out most of their money. So that, you have a lot of investors in this sub $2 million price point looking for those exact opportunities. Even with interest rates where they're at that 6%, yes, it was way easier to invest and borrow debt when interest rates were 3%, 4%. But even still, right now, starting to see that sellers have kind of grasped the fact that values have decreased because of interest rates. Buyers can't afford as much, and now you're seeing that these buyers are still finding opportunities, and they're pulling the trigger and moving quickly. There was a 22 unit portfolio in Lewiston. I think it was 3 buildings 2 weeks ago. And again, it is at that like 2 million price point. That'd be about right. 20 times 100,000 unit. So it's about 2 million price point. They came on Monday. They had 3 group showings, like Tuesday, Thursday, Saturday, and it was under contract Saturday night. Moves very quickly. Now, there at the same time, there are properties that sit. There's actually a 12 unit that was listed in Portland, kind of like mid-fall, and it expired. No one wanted it. It was priced too high. So you do see, I guess the point I'm trying to make is, yes, there's the outliers of things not selling, but for the most part, if there's an opportunity, people are moving quickly and they're pulling the trigger. So that, I think, is all I got today on kind of this, like the investment opportunities out there. You need to really think about what investment type you're looking for. Are you a low risk, high risk? And, are you looking for an appreciation play, a value add? And then location, like what are you looking for? Are you looking for, a stable city like Portland? We might have to deal with, I won't say politics, but you got to deal with like, the government body there with like rent control. Or are you looking for just somewhere else and you're okay with more of a, appreciation, long-term appreciation cash flow, but it's not that like desirable first tier market.